So there's a few myths going around out there that I'd like to address today for you, just to kind of clear some things up. The first myth: you need 20% down to purchase a house. No, you do not need 20% to purchase a home. There are programs that will allow you to inject as low as $1,000 to purchase a home. There's 3% programs. There's 3.5% programs. There are plenty of different programs out there that are offered through Fannie, Freddie, Jenny, you name it, it's there for you to get into a house with less than 20% down. So if somebody comes to you and says, hey, I can't buy a house because I don't have 20% saved up to put down, you don't need it. You can do it. So contact me. I'll let you know how. Second myth, FHA came out with this beautiful 40-year mortgage. They did, but they didn't. So what does that look like? FHA said, hey, if you're struggling, if you currently have an FHA mortgage and you're struggling making that payment post-COVID, lost a job, whatever the case may be, contact your servicer and see if you can do what's called a modification. Basically, that is when we take your existing loan, modify it, extend it over, in this case, a 40-year period to lower your monthly payments, to make the payments a little more affordable for you. A lot of people, their payments have increased because of property taxes. Their payments have increased because of homeowners insurance, or their monthly obligations are just a little bit higher, or they're making less. You don't have to sell your property in order to stay in your, you don't have to sell your property in these cases. Stay in touch with your servicers. There is that option to do a 40-year FHA modification. That 40-year is not available for a purchase, which is where the myth comes in. It is only available if you if you do a modification on an existing FHA loan. Now, this third piece that I've been hearing about, got a couple phone calls saying, hey T, I heard if I had a higher FICO score, I now have a higher interest rate on my mortgage, where we are giving lower interest rates to people with lower credit scores. Just the theory of that doesn't make sense to me. This is my opinion, there's zero logic in that statement. So the question then becomes, why are people believing this? Why do people believe that this is a thing? So we can go into a lot of detail on this. I can probably talk about this for 30 minutes, talk your ear off, but there's no need for that. I'll just give you what you need to know. This is the chart that is circulating around the internet and on the news right now. FICO scores here, loan to values here. So if I'm looking at this, I'm going to say, hey, all this red is bad. All this red is in the higher FICOs. So that tells me that if I have a higher FICO, I have a worse interest rate. Subsequently, if I have a lower FICO, I have a better interest rate. That is not what this chart is showing you. This chart is showing you the adjustments that were made to the existing interest rate tiers according to loan to values and to your FICO score. If you look at what it truly is right now, all the system did was said, hey, instead of having A1 credit be at a 740 before, where you get the best pricing, we're going to change that to a 780. So instead of everybody from a 740 higher having the best pricing available, now that's 740 to 760. It's good pricing. It's still really good pricing, but it's not as good as that 780 side. People with lower FICO scores are still going to have a higher interest rate. It's just not as high as it used to be. So the system, in a sense, is balancing things out. Pay your bills. It makes no sense to say, hey, if I have a lower credit score, I'm going to get a better interest rate on a mortgage. Makes zero sense at all. All the system did was went in and said, okay, let's make a couple of adjustments. Instead of completely penalizing people with bad credit, we're still going to penalize them, just not as much. And instead of giving crazy incentives to people with higher FICOs, we're still going to give them incentives, just not quite as much. This whole system is in play to balance things out a little bit more, just to make housing more affordable across the board. So I say that to say, when you're looking at something, go with your gut. If it doesn't make sense, odds are it doesn't make sense. It's not right. Again, this is what's going around the system. These are true figures. This does not show what those adjustments are. This just shows the percentages that were changed in order to balance things out. So in a sense, this is the medium. This is how we're getting to this. Better credit still comes with a better interest rate, lower payments. A lower credit still comes with higher interest rates, a larger payment. As simple as it can be. If you have questions, slide into my DM. If there's anything else you ever want to know about, please let me know. Thank you for your time. Have a good one.